Hello guys, how are you? This is your teacher Haris Bhatt and you are seeing my YouTube channel Learn Accounting with Sir Haris. Today, as discussed in my last video, we are supposed to solve the question of May-June 2025, variant 22, question number 1. AS level accounting, paper 2, May-June 2025, variant 22, question number 1, which has come from company accounts. It is a complete question of company account with some part of depreciation and statement of changes in equity. And the second question is from errors, which we have already solved. I have uploaded the video. You can see that. Thanks for Sir Peter from Zimbabwe. And to my brothers, elder brothers, Numan Malik Saab. And third question is from incomplete records, which is very simple question. Rather not, I would say it is incomplete record. It is just a general question, including some part of ratios also. And the fourth question is from marginal costing. So soon I'm going to upload the remaining questions, third and fourth question, inshallah ta'ala, today at night, hopefully. But currently, and I might go for live streaming also, if possible, for me, before the result is going to come out on 12th of August. So let's start the question. Question number 1, H Limited, May-June 2025, variant 22, company accounts. H Limited financial year ends on 31st December 2024. Remember the date, it is 31st December 2024. On that date, the following transactions are basically available. Following information was available. Non-current assets included the following: motor vehicle 80,000, 28,400 is the provision for depreciation. Depreciation policy is 20% per annum using the reducing balance method. Allocation 75% distribution cost, 25% admin expenses. Furniture and equipment $45,000. Cost is 16,200 depreciation. That is the accumulated depreciation. 15% per annum using the straight line method. 100% to admin expenses. On 1st July 2024, equipment which cost 8,000 was when purchased on 1st January 2022. So remember that we are currently in 2024. This is the end of 2024. So it means that this asset of 8,000, which has been purchased equipment on 1st January, it has been used in 2022 for the whole year, then 2023 for the whole year, and it has also been used in the current year of 2024 for 6 months, right? Because on 1st July, it has been sold for 3,900. We can find the profit or loss on sale of asset. We can find the total depreciation charge on the asset sold, and we can find also the current year depreciation, which includes 6 months on this asset which has been sold for the current year. Why? Because the depreciation is provided on furniture and equipment on a month-by-month basis, so it's a monthly basis, and in the year of disposal. So we have to charge it as it is used for till 30th June. So we have to charge for 6 months. But the method is straight line method. So that becomes a little easier for us. If you want to see that, so calculate the depreciation charge on the following non-current assets: motor vehicle, furniture and equipment. Then calculate the profit or loss on the disposal of equipment. Then 10% debenture, which is a non-current liability. Admin expenses carried outward. Distribution expense. Cost of sales is given. That's fine. Debenture interest is given. Director remuneration, which is an admin expense. Distribution cost. Dividend paid. Office wages. Marketing office expenses. Marketing expenses is again distribution cost. Property at valuation is given. Rental income, that is other income. Revenue, sales staff wages and salaries are given, and the adjustments are also given in the question. I just want to make you realize this is May-June 25, 22, 9706, which is not yet uploaded by the Cambridge, not yet disclosed by anyone. So it is here for you, May-June 2025, 22, question number 1. So let's start calculating motor vehicle depreciation for motor vehicle. That is 20% using the reducing balance method. So 80,000 minus 20,000, 28,400. Let me calculate it here for motor vehicle. 80,000 minus 28,400. So as I'm going to solve the question right in front of you, so I'm going for the calculation, right, with you, because I didn't solve it earlier. I'm not used to do that also. I always used to solve it right at the moment. It might be possible that I did some mistake, which should be overlooked or which should be informed to me by any of the teacher or any of the student. I learn from you and I always have been great respect for you, right? For this particular instance, you are basically providing such kind of a, Great. So 80,000 minus 28,400. The answer is 51,600 into 0.2. That is 10320. 75% to distribution, 25% to admin. So let me write here 10320. And then I will go for the distribution also. Into 0.75. 7740 will be part of the distribution cost. 7740. And for admin, that is going to be the remaining amount. Obviously, 10320 into 0.25. So 2580. Okay, we are done with that. Let's go move forward. Now we have to charge depreciation on furniture and equipment. As it is straight line method. So as I discussed with you earlier, that how we are going to charge depreciation, it is the current year depreciation charge for the year. The steps are: first, calculate depreciation on the newly purchased asset. There is no asset which has been purchased in the current year, so we will omit that. Next step is calculate depreciation on the asset sold. As this is straight line method and month-to-month basis, so it means that asset sold are supposed to be depreciated. It will depreciate. So this cost, the asset which has been sold, cost us 8,000. It has been depreciated in the current year for 6 months. So 8,000 into 15% into 6/12, because current year it has been depreciated. Yes, I know that the asset is purchased on 1st January 2022. Sorry. Yes. So in 22 it has been used. Yes. Then in 23 it has been used for the whole year, and then it has been used for 6 months in the current year, which is the depreciation charge should be included in the depreciation charge for 2024. Right? Right. So let's move forward. Now, next step is calculate depreciation on new, that's not available. Calculate depreciation on the existing assets, which has already been there with us. That is 45,000. So in 45,000, the cost of 85,000 is already added. So I will subtract minus 8,000 because it is already there with us. So 45,000 minus 8,000, because we have charged depreciation on this particular asset of 8,000, which is a part of 45,000. And now I will calculate depreciation at the rate of 15% under straight line method, which has to be calculated on cost, which is 5550. So we are done with that. And this depreciation is going to be recorded. All of them, all the depreciation will go to, yes, admin expenses, because it is given in the question. So we are done with that. It will be written in admin expenses, all of the depreciation. You know that office equipment is always used in the office. So it should be a part of admin and office expenses. So let's see. Furniture and equipment. We are done with the depreciation. Now calculate the profit or loss on the disposal of equipment. So the asset cost which has been disposed of, the equipment which has been disposed of, cost us 8,000, right? And it has been purchased on 1st January 2022 and sold for 3,900 on 1st July 24. So let's calculate the depreciation on this asset. In 2022, it has been depreciated 8,000 under straight line method on cost for the whole year. So the depreciation is going to be 1,200. Again, in 2023, it is going to be depreciated again at the rate of 15% on cost, straight line method. Depreciation will come again. That is going to be, that is going to be 1,200. Then 8,000 into 15% into 6/12, which we have already calculated, which is the current year depreciation also. But because it is month-to-month basis, so we have to calculate depreciation in the current year also for 6 months. As the asset is used from January to June, January, February, March, April, May, June, that is 6 months. So the total depreciation is 3,000. Now, the cost is 8,000 minus 3,000. The book value is going to be 5,000. So book value of the old asset on the date of sale is going to be 5,000. Now let me calculate it. Yeah. So 5,000 minus 3,900, because it has been sold for 3,900. So we are going to have a loss of 1,100. So loss is going to be 5,000 minus 3,900. So 1,100 will be the loss on sale of asset, loss on sale of furniture and equipment. So this we are done with that, and we have calculated the loss also. It could be profit also, but there is a loss on profit on disposal. One more important thing, which is very important, that now the All the expenses and cost of sales are given, and further additional information is also given, which will go with that. But prepare the statement of profit and loss for the year ended 31st December 2024, or the income statement. Remember, this is very important. No format is given. So kindly, please, teachers, please. I know that most of the videos are being, my videos are being basically seen by the teachers actually, rather than by student. If I see my, viewership, 30% is being seen by the people who are from 16 to 25, and 70% is being seen by the people who are looking at my at my channel are from 70% of the viewership are from the people of age of 25 to 35. So they are obviously teachers. I respect them all. I learn from them. The statement of profit or loss for the year ended 31st December, no format is given. So please don't inform the students that formats are always given in the question. I have never informed such kind of things to my students. So please do remember that formats are important, and we should have an idea about the formats also, and prepare the formats also. So yes, it is known to be a structured paper, but it doesn't mean that you will be given formats all the time. So this is the proof which I have shown you right in front of you. So statement of profit and loss will start from the revenue. Let me see what is the amount of revenue. Then I will subtract cost of sales, where we don't have been given the opening inventory plus purchases minus closing inventory. Why, sir? Because the cost of sales is already given. That is 288,400 here. So revenue is here, 5,70,000. There is no sales return. So I will write here 5,70,000 less cost of sales. Cost of sales, that is going to be how much? 288,400. Right here, 288,400. And we will get the gross profit. And obviously, soon I will write the gross profit. I have to add the other income in that. 288,400. That is 281,600. That is going to be the gross profit. So labeling is very important. Remember that you have to label it with the full amount, full version of label, not the GP. I used to do it in my lectures, but otherwise number will not be given. So other income you will add, that is going to be your rental income. Let's see what is the other income is given in the question. That is rental income 7,200. But there is an adjustment. There is an additional information regarding the rental income. Part of the premises has been rented out since 1st May 2024. We are in the year of 2024. This is the current year. So we basically rented out premises, that we let out our premises for rent. That is the income which we are getting. The rental income is 2,400 for every 3 months payable in advance. So rental income is basically, we used to pay the rental income. We used to receive the rental income every 3 months in advance. So it means that we have received the rental income of May, June, July. That's fine. That becomes then June, July, August. That's fine. Then October, November, and December. So for October, November, and December, if the income is 2,400 for 3 months, so we have to calculate the rental income for the whole year, which is given here 7,200. So let's calculate. If the rental income is 2,400 for every 3 months payable in advance, it means that we are getting the income in advance for May, June, July, which is obviously a part of the income. We are getting the income of next 3 months, June, July, August. Let me calculate it. 2,400 for May, June, July, August, September, October, plus 2,400. And November, December, that is for 2 months. That is plus 1,200, right? 1,200. So it becomes 6,000. So the income which you are supposed to get, 2,400 for May, June, July, and 2,400 for August, September, October, and 1,600 for November and December. So that is 6,400. This is the another way of writing rental income. So I will write rental income here. Rental income is going to be 6,400. Oh, let me write it in the next column. Now take it in some other way. We have a rental income of 7,200, right? And we are receiving the income in 3 months, we are receiving rental income 3 months in advance. So we have received May, June, July, July, August, September, and October. In October, we have received the income for the 3 months of which last for October, November, December, and January. So the January income which we have received is basically unearned income. It is the income received in advance. And the January income, rental income, is as the income is 2,400 for 3 months. So 1 month of January, the income is going to be 2,400 divided by 3, that is 800. So the 800 of the income we have received in advance. So you can do that also. 7,200 minus 800, which is the rental income received in advance, unearned income, which is subtracted from the income and will also be shown as current liability, 281 in the balance sheet, 281,600 plus 6,400. So we have 2,88,000 now. So we are right here, 2,88,000. Now I'm going to write less operating expenses, which includes the distribution cost and which includes the admin expenses. And then we will be having the profit from operation. And then I have to subtract finance cost from this. Then I will get the profit before taxation, the profit before tax. Then I will subtract less taxation, whatever the tax is given, and I'm going to get the profit after tax. This is the format which I want you to inform you, and definitely you have to be very vigilant about the formats also, because it is done that formats are a part of the game, and you have to go for the formats also to understand the proper way of preparing the question. So let's go for the distribution cost now. I hope you are able to understand everything, whatever I have gone through. So the distribution cost, director's remuneration is an admin expenses. Okay. So first let's talk about the distribution expense. We will go for the working, obviously. Distribution cost is 9,800. So let me write here for distribution cost. That is 9,800. Then let's see other things. That is depreciation. Depreciation on what? Yeah, depreciation on motor vehicle. Out of the motor vehicle depreciation, which we have calculated already, 10320,7740 is a part of, basically is a part of distribution cost. Should go to the distribution cost. So we have added. Next, other things which part of a distribution cost is carriage outward, 2,700. So I will add 2,700 in distribution cost because carriage outward should have been the part of distribution cost. This is the way the company accounts are prepared. We used to make a head of distribution expenses and admin expenses or selling and marketing expenses with the office and office expenses or admin expenses. Next cost, which should be part of distribution cost, but is marketing expenses, 24,240. And sales staff wages and salaries, obviously it is also distribution cost. Selling and distribution expenses, 62300. So let me add that first. 62300. Okay. Now the marketing expenses. We have an adjustment regarding marketing expenses. Marketing expenses include the cost of an advertising campaign, 8,800, which runs from 1st September 2024 to 30th April 2026. Right? So marketing expense includes the cost of 8,800. So marketing expense are given how much? 24,240. It is right in front of you. But there is an advertising campaign of 8,800, which runs from 1st September 2024 to 30th April 2026. How many months payment of advertising campaign has been included, which is 8,800, which is included in the marketing expense of 24,240. That is, let me count it. The amount which comes in our current financial year is basically the months which comes in our financial year are basically only 4 months: September, October, November, and December. But we have paid this 8,800 advertising campaign from September till 30th April 2026. How many months it is going to be? 4 months of 24, 12 months of 25, whole 12 months, and 4 months of 26, January, February, March, April. It becomes 20 months. So 8,800 of the payment is basically the advertising campaign for 20 months, out of which it means that out of which only 4 months should be a part of marketing expense for the current year. So it means that all the amount of out of 8,800, the 16 months is going to be the prepaid marketing expense. So 8,800 multiply by 16 divided by 20, you will get the prepaid marketing expense. How come, sir? I repeat again. 8,800 is the advertising campaign which includes in the marketing expense. We have already included. It means the 4 months payment from September, October, November, December for 24 is already added in 24240. And the next payment of 2025 for the whole 12 months and the 4 months of 2026, January, February, March, April, is also included in 8,800 and is a part of 24240. So it means that it becomes, in all, it becomes 20 months. So 20 months payment is a part of, which is basically with an amount of 8,800 is included in 24240, out of which 16 months does not belong to our financial year. So 8,800 into 16 divided by 20, it is going to be 7,040. So 7,040 is going to be our prepaid marketing expense, which is going to be subtracted from obviously 24240. So 24240 minus 7,040, this becomes 17,200. So let me repeat it for you again, because obviously it is technical point. So I repeat it again for you, just for the sake of understanding, that 8,800, which is a part of marketing expense, 24240, it includes 8,800. And that 8,800 belongs the whole period of 20 months from September 24 to 30th April 26. This becomes 20 months, 12 months for 25, 4 months for 24, and 4 months for 26. Out of this 20 months payment of 8,800, only 4 months belong to our financial year. So it means that 16 months payment has been done for the next financial years, which is basically prepaid expense, prepaid marketing expense, which needs to be subtracted from the marketing expense paid, which includes 8,800. So 24240, 8,800 into 16 over 20, 7,040, and we'll subtract 24240 minus 7,040, that is 17,200. So let me write here now, marketing expense 17,200. One more thing, which is a part of that, that is the sales staff are yet to be paid an annual bonus of 2% on all sales above 4,50,000. So that is also a part of sales staff wages and salaries, or you can say that is accrued wages, accrued sales staff wages and salaries. I will add it into 62300 and then I will write it. Let's suppose 4,50,000 above sale of 4,50,000. So 5,70,000 minus 4,50,000, that is going to be how much? 1,20,000. And on that, 2% we have to pay as bonus. Let me calculate it on the calculator also, so that we should not do any kind of mistake actually. 1,20,000 into 22%, that is 2,400. So 2,400 is the sales staff accrued salaries and wages, also treated as bonus. So I have to add them up over here in 6.2, whatever is going to be our sales staff wages and salaries. Let's see. Sales staff wages and salaries 62300 plus 2,400, and that I will write here. 62300 plus 2,400. The answer is 64700. So I will write here 2,700 plus 64700. Okay, I will repeat again. Sales staff are yet to be paid an annual bonus of 2% on all sales above 4,50,000. So bonus yet to be paid. 450, 570,000 minus 450,000, that is 120,000 into 2%. 2,400 is the accrued wages and salaries, which needs to be added in sales staff wages and salaries. 62300 plus 2,400, that is 64700. Now I will go for the total of distribution cost. That, let me calculate it, 9,800 plus 7,740 plus 2,700 plus 64700 plus 17,200 marketing expense, 102,140. 102,140 is the distribution cost. Now I'm going to write the admin cost or admin expenses. So admin expenses are given already above side, which is going to be how much? That is 11,560. And director remuneration is a part of admin expenses, which is 56,000. So I'm going to write 11,560 plus 56,000. right? Sir, how you are writing director remuneration in admin expenses? Because directors are always a part of admin department, and it is given in the question that director's remuneration is an admin expenses. Then the depreciation on office equipment should also be written under the, here it is right written, on admin expenses, office depreciation, that is going to be 6150, including the current year depreciation, which includes the asset sold depreciation and the existing asset depreciation, both will come. Then we have been given the office wages 37150, but it is clearly mentioned that the office wages were owing were 1250. So this will be added. Office wages are 37150 plus 1250. And then I will write over here. Let me add them up. Owing accrued 37150 plus 1250. That is 38400. 38400. Right? Now I'm going over the total of the admin expenses. That is going to be 11560. I hope you got the point. Right? Plus 56,000 plus 6150 or plus 38,400. So the answer is 112, 112, 112,110. So 112,110 is going to be the admin expenses. So I will write here distribution cost is 102,140 and 112,110 is going to be the admin expenses. I will go for the total and I'll find the operating profit basically. Let me see if I have missed something. Debenture is supposed to become afterwards. So I think I have recorded all the things which are needed in the question. Done with that comfortably. So let me go for the total of these expenses. MashaAllah. Everything is going fine. 112,110 plus 102,140. That is 214,250. 214,250. That I will subtract the 288,000 minus 214,250. The answer is 73750. So that is the profit from operation. 73750 is the profit from operation. Now I will subtract finance cost from this. Finance cost is basically the debenture interest, and the debentures were issued on 1st April 2024. So it means I have to pay interest on debenture. The cost of non-current liability is 80,000. 10% is the debenture interest. So 80,000 into 10% is 8,000. But the debenture has been issued on 1st April. So you have to pay interest from April till December. Let me calculate April, May, June, July, August, September, October, November, December for 9 months. So let me calculate 80,000 into 10%, 8,000 into 9 divided by 12. That is 6,000. But here we have been written debenture interest is 4,000. It means that 4,000 you have paid and 2,000 is the accrued debenture interest. That is the debenture interest payable, right? And it also be written in the other payables in the current liability, but balance sheet is not required. So I will write the whole according to accrual concept. Expenses are recorded in the period to which it relates. So I will write the whole debenture interest, whatever is the expense, rather than writing it 4,000, which is paid. 73750 minus 6,000, that is 9 months, 67750 is the answer, which is profit before tax. Now let's go for the taxation. Sometimes the tax amount is given a percentage of the profit before tax, but here taxation is estimated to be 4,200 and it is given in the question. So that becomes the question more easier or easier way to understand it. I will write here. So that is going to be 67750 minus 4,200. So the profit after tax is 63,550. Let me write here. Profit after tax is 63,550. So we are done with that. Hopefully you are able to understand the whole format and whole thing. It is not an easy question, but not a difficult question. I will take it as a average difficulty level. Now let's move forward. As I discussed with you that the reversal method of statement of change in equity has to come and revaluation downward has to be a part of the point. So this is there. So now additional information is given that during the year ended 31st December 2024, an issue of 4 lakh ordinary share of 0.5 each was made at a premium of 0.2 per share. The issue was fully subscribed. And at 31st December, the director decided to revalue property at 8 lakh 20,000. Prepare the statement of change in equity for the year ended 31st December. So let me pass an entry for you first for the right shares. The entry will be For the right shares, they are normal issue of shares. The bank will come 4 lakh into 0.7, because 4 lakh shares are issued, multiply by 0.7 is the amount. Why, sir? Because 0.5 is the amount of share face value of the share, 0.2 is the premium. So 0.5 plus 0.2, 0.7 we are getting by the issue of right shares. That is going to be 2,80,000. Share capital is always written with face value everywhere. The share capital will come 4 lakh into 0.5. That will be going to be 2 lakh. And then comes the share premium. That is 4 lakh into 0.2. And that will be 80,000. So we are done with the entry. This is just for the understanding purpose of you. Always remember that if the per share value is less than 1, the amount will be less than the number of shares. So next, the value of property is revaluation downward by 8,20,000. Now it has become 8,20,000. What is the value? Let's see. The value of the property. Property value given in the question, where it is. At valuation on 1st January, 9,70,000. Right? It is 9,70,000, but now it has been revaluation downward and it has become 8,20,000 as given in the question. So let me calculate 9,70,000 minus 8,20,000. So that is 1,50,000 is going to be taken out from the statement of from the revaluation reserve first. 9,70,000 minus 8,20,000. That is revaluation downward of 1,50,000. Where the amount is supposed to be taken. If the revaluation reserve is there, it will be subtracted from revaluation reserve, and the remaining amount will be subtracted from the retained earnings. So let me calculate now the statement of change in equity for you. First of all, the balance brought down is not given. Share premium at the start is not given. Fine. But share issue, we know that share capital will increase by 2 lakh and share premium has increased by 80,000. I will write here. So the ending balances are given. Profit for the year we have already calculated. Let me make you see the profit also. I will write here. Then there is a revaluation property downward. First, let me see the profit for the year. Profit for the year is 63,550. Let me write it here. Profit for the year in the retained earning column, 63,550. And let me subtract the things which are not needed actually. So I will rub them up like here, 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 because we're done with that now. It means 2 lakh is the increase in the, because of the share issue, 2 lakh will be increase in the share capital and 80,000 is going to be increase in the share premium. I have written that. Profit for the year I have taken from my income statement, which I have already prepared. Statement of profit and loss, that is 63,550. Now let's move on towards the revaluation downward. So 9,70,000 is going to be the property, and it has now decreased to 8,20,000. 1,50,000 is going to be the revaluation downward. Amount is going to be taken out of revaluation reserve first, and the remaining amount is going to be taken out of, is going to be taken out of retained earnings. If revaluation is given, reserve is given, amount is taken from the revaluation reserve, and the remaining amount is taken from the retained earnings. So 95,000 I have taken from revaluation reserve because it is the only thing which we have currently, and the remaining 55,000 is taken from the retained earnings, right? Now dividend paid, let me see. And okay, what is the amount of dividend paid given in the question? Let's move back. It is given, yes, it is given. You see, here comes dividend paid is 22500. So that will come in statement of changes in equity. It's a part of statement of changes in equity. It's subtracted from retained earnings. Okay. So 22500 is a negative figure. Will come as a negative figure as a subtraction from the retained earnings, 22500. Okay. So let me write it in the next column also. That becomes 22500 as a negative. Here I will write the revaluation of property. There is a decrease of 1,50,000 in total. Then profit for the year, there is an increase of 63,550 in the total of equity, statement of changes in equity. Then with the share issue, there is an increase of 2,80,000 in the total equity, right? And now I will go reverse to find the ending figures and to find the balance brought down of the retained earnings. So share capital is 7,25,000. We have issued shares in the year of 2 lakh. So 7,25,000. If you go back to the question, you will not find the amount of share capital at the start. It is not given. Minus 2 lakh, it comes 5,25,000. Well, here it comes 5,25,000. Now let's move to a share premium. 1,20,000, 80,000 premium has been increased because of the right issue. So 1,20,000 is the total premium. Here it is given. Minus 80,000 will go reverse. So 40,000 is the share premium at the start. Now I can go for the total easily. 5,25,000 plus 40,000. Revaluation reserve is 95,000, which is no more at the end of the year, plus 112,700 is the retained earning at the start. 772700 is the total of the retained earning at the start. Now let's go back at the end. This will become nil. I have to calculate it, obviously. Retained earnings at the ends. At the end, 112,700 minus 22,500 minus 55,000 and plus 63,550. 98,750. So 98,750 is the answer. And I will go for now the total equity, which I can do 7,25,000 plus 1,20,000 plus 98,750. 943,943,750. These are what we are done with the statement of changes in equity. Remember that the total column, either you take it horizontally or you take it vertically, total column should be the same. Just for to check your, whatever you have done, either this is right or wrong. So I'm going for the total of the second, I'm going to total it also for the total column. Like I'm going for the total of the total column, and which again comes the same if I will do it horizontally. That is 943,750. Hopefully you are done with that. This is a question of reverse, but reversal regarding the share capital and share premium in this question is quite easy. Why, sir? Because the number of right shares are given already. Otherwise, we would have been it could have been calculated. In the past years, the question has come in which you have to calculate the right shares by going reverse through mathematical way, and that will be more difficult. But this is rather easier one. So we are done with the statement of change in equity. I hope you got it, and 6 marks are there for this particular part of the question. Let's move forward. There are plans to expand the business. There are plans to expand the business, which will require additional finance. Directors are considering 2 options. Make a right issue of 1,50,000, ordinary share of 0.5 each, at a premium of 0.2 per share. Issue an 8% debenture for 1,05,000. So what we are doing, and he has said that which option we should choose. Advise the director which option they should choose. Justify an answer by discussing both the advantage and disadvantage of both the options. So I'm not going to write it down. I'm just making you understand that how we are going to do that. So make a right issue of 1,50,000 ordinary share. If you multiply it with 0.7, 1,50,000 into 0.7, you will get 1,05,000. So issue an 8% debenture for 1,05,000. So debenture will increase your non-current liability, which has to be repaid at some stage in 2027. So there is an increase in non-current liability. And remember that we have already issued debentures in the past, right? Then we have already issued right shares also with an amount of with a number of shares of 4 lakh in the past. But debenture will increase our interest expense also. And interest is 10%. Now the interest has reduced on these debentures, that is 8%. So interest expense is reduced a little, but overall it will increase in interest expense and our profit will decrease. Then our business will become more riskier because our non-current liability will increase and it has to be repaid at some stage. Then in order to issue or take debenture, it might be possible that we have to go for some collateral. It is a possibility, or we have to share some financial information, financial statements to that particular concerned person for that particular purpose. But if you are going for, I will go with the right shares, because if you issue right shares, this is a permanent source of capital where the debentures are not a permanent source of capital. It's a temporary source of capital, has to be repaid. So permanent source of capital is right shares. And secondly, the right shares are issued at the same par value and the same premium, which is given in the last year. So I will go with right shares. Why? Why? Because it will not result in increase in liability. There will be no effect on profit because of right shares. Yes, but we have to pay dividend, but profit will remain the same, right? It might be possible that because of right share, our market value might decrease, that people will be able to, we have an idea that companies facing liquidity issues, and that's why it might be possible that market value of the share might decrease. But we'll go with the, permanent source of capital. Right shares are issued, right? The ownership will definitely will be divided, right? Ownership will be diluted because of the right shares. But overall, that no non-current liability will increase, and we know that it is a limited liability concept of right shares, and the liability of the shareholders is limited to the extent of shares held by them. So this is how we are done with this part of question. You can write any other answer if you want to. They are both will be accepted. Now the second question, we are already done with that. Inshallah, I'm going to solve the marginal costing question also soon. Now I'm going to go for the third question. Zach has not maintained a full accounting records for his retail business. He has provided the following details for the year ended 31st December: purchases, return outward. Inventory levels increased by 2730 during the year ended 31st December 2024. ZAC policy is to sell all goods to achieve a gross profit margin of 40%. Calculate the revenue for the sales. So remember that inventory level increased by 2730. So you can assume like this, that the opening inventory is 0. It's quite easy. Opening inventory is 0. Purchases are going to be 82980. You can write it in bracket. You can prepare a format of also, no problem. 82980 minus purchases return 1050, right? Then there is going to be the closing inventory, which has been increased by 2730. So the closing inventory is 2730. I'll subtract it. I'll go for the answer of the cost of sales. So let me write it down. What is the amount of cost of sales? 82980 minus 1050, 81930 minus 2730. So cost of sales is going to be 79200. Now the gross margin is going to be 40%, which is 40% is the gross profit margin on sales. I have to convert it on to markup. So the formula is going to be markup into margin is 40 over 100 plus 40, 40 over 140. But for margin into markup, it is 40 over 100 minus 40, that is 40 over 60. 79200 into 40 divided by 60 will get the gross profit. 79200 into 40 divided by 60, that is 52800 plus cost of sales, that is 79200, will get the answer of 1,32,000 is going to be the revenue for this question. 132,000 is the answer for this question. Okay, this is going to be the cost of sales, which we have calculated. Now, if you find 1,32,000 into 40%, remember that you will get the same answer of 52,800. You can check. But unfortunately, sales was not given at that time. We are supposed to find sales actually for the solution of the question. So here we are done with this question. The next part is the type of a sale ledger control account which is required. Quite easy. We have to prepare the SLCA and the amount owed by credit customer. Yani, you have to find the trade receivable at the end. So it's a quite easy question. I will solve it by changing the format. And then we have a question of margin costing, which inshallah I will solve today, inshallah at night. Thank you very much for your time. Inshallah, stay. My number is 0333471287. You can ask me any question on my WhatsApp, right? Feel free to ask any question and have a ball. I wish you good luck in your exams or in your result. At the time of your result, I hopefully you will get a better result on 12th of August. Please keep praising me, keep motivating me, keep appreciating me so that I can give, I can bring some more videos, exciting videos for you, and subscribe my channel. Follow me Instagram and on Facebook. Thank you very much. Have a nice day. And now, please.